Have you ever been trading? Next thing you know, the stock just reverses on you out of nowhere? Well, you need to stop trading without key levels in your chart. Let's get into this video. This isn't quite rocket science how you find key levels. I use the top-down approach, which pretty much means I start from the monthly time frame and work my way down lower into the weekly, daily, and hourly time frames to find key levels. Now, when you trade stocks like Tesla, Amazon, Nvidia, they tend to respect your key levels on the daily time frame. While you trade stocks, pump and dump stocks, penny stocks that don't really have a defined daily chart or weekly chart, it's going to be much harder to find key levels to take trades around, which is why I prefer to trade large cap tech stocks or Dow Jones names, decent sized market cap that aren't easily manipulated. Now let's jump into Thinkorswim. I'll give you some examples on stocks like Tesla. We'll look at the Nasdaq futures, and we'll look at how precisely some of these equities follow these key levels and how you can take trades based off of these. All right, so right now we're looking at Tesla, and just off first glance, you may be a little bit concerned. You may think this is way too messy, like you don't understand what you're looking at or why you would want this many lines in your chart. But when you zoom into an intraday time frame, you really see how precisely these stocks bounce off these key levels. It really makes it much more easier to base trades off of and gives you a better risk reward than taking trades in the middle of nowhere. And it also gives you a fine trade plan. You're taking trades off historical levels for prices that bounced off or rejected previously in history. Now, let's just clear this chart off and make it a little bit more clean, and I'll show you how you can find key levels and take trades based off of them. And in case you didn't know, just in the bottom right hand corner here, there's a thing that says drawing set. You can just change this and you can create a new drawing set. I already have a blank preset, so I don't have to worry about it. But you can always flip back and forth in between different drawing sets if you want to look at different things on different sets. Now, moving on. You want to take this out to the monthly time frame. Now, looking at this monthly time frame, it may be a little bit not really sure what to do here. So pretty much, I'm just looking for highs and lows, and I'm gonna mark these levels out. And you can name whatever you want, but I prefer to name it, key level, and just draw it out. Once you get one named, all you have to do is press spacebar, and then you can just draw it out. It will copy and paste the same exact drawing tools and everything. And right down here, there's obviously some wicks down here on the monthly time frames, bouncing off those. Price came up here. Just want to get all these highs documented. Now already we're making pretty decent progress. Now let's zoom into the weekly time frame. These two levels right here are pretty close. I'm just gonna delete the second line just to make it a little bit more clean. And now when you zoom into the weekly time frame, you start seeing things a bit more clear. So you got some more levels right here that price bounced off of. More levels right here. I'm gonna just delete this one. It's pretty close. Let's move up. Of course, you want to document the all-time high. You got some more price rejection right here at about 1200. Got some price rejection up here at 11,500. I like to document lows on candles. January low is 792. Document that. Ukraine, Russia low right here. Now that you got pretty much all the key levels documented, we're pretty much just looking for rallies and where they ended. Swing high all the way up here. That was the previous all-time high right here. And you came back down. Now let's just zoom in a little bit further. Right here we had this swing low in July of 2021 on Tesla. Price came down here at about 620, and look exactly where price bounced off of May 23rd. It came down to 620 and bounced off it perfectly. Now, if you didn't have this key level in your chart, you may be wondering why Tesla decided to bounce right there. But now you know why it decided to bounce right there, because it was a previous historical level. And stocks tend to respect these levels and bounce off them. Now let's just zoom into the daily time frame. I like to use the 2-year daily. And as you zoom in, you're going to start seeing more levels. So already here's a new level you can't see on the weekly time frame. June 2021, we have this swing high right here. And look at where the swing line coincided. It was about $700. And the swing high back here was about $700. So we can actually extend this key level right here. Now look, it coincides perfectly with the swing high, and look exactly where price bounced off of during the Russia-Ukraine tensions. It came down here, bounced exactly off this key level back from June 2021, and which is also a psychological low at $700. It bounced perfectly off it. This could have been a great trade if you were prepared this day. So I'm already seeing some new key levels right here. I got these lows right here. Price kind of came down here, bounced off it multiple times and flushed right through. Another key level right here. Got like 1, 2, 3, 4, 5, 6, 7 wicks off this level. Price tried to come right above it. Clearly got rejected. Now you can zoom in even further, get a little bit more detailed. I'll just zoom into like the 2-hour time frame. And then when you zoom into these intraday time frames, you kind of see just how much these levels are respected, especially on like big equities like Tesla. So the 700 level, going back to June 2021, as we just went over, a price consolidated on 700, try to bounce off it, bounced off it once or twice. And just look how big this level of 700 is. I mean, you have multiple touches on this key level going back to June 2021, trying to hold this level of support. This level here at 620 was a swing low from July, as I mentioned. And zoom in right here, July 620, and look exactly where price bounced off of. It came down here on May 24th, hit this key level almost to the penny. It was 11 cents off and bounced off it. If we would have taken this trade right here, it was a 170 point move on Tesla, and look exactly where it came into the 792 level from the February low. If you had these levels on your chart, you could have gone long down here at 620, gave you a good risk reward setup because you know if your breaks below 620, clearly you have to get out this trade. Then you have price targets above. You could have taken profits here at 680. That would be a good level to take profits at. The key level at 700 is a good level to take profits at. And then as price, rejected clearly off 792, that would have been your signal to get out this trade because price is clearly rejecting that key level. If you don't have these levels on your chart, you may not be aware. You just try to hold and hope, hoping the stock keeps going up, not knowing we're hitting key levels on the daily, weekly, and monthly time frames, which are going to act as huge levels of support or resistance, depending on which way you're playing. Now let's move into Amazon. It's a similar story here on Amazon. So we'll just go over it, we'll make some key levels, and already off the bat, you can kind of see like how critical these key levels are. So right here, we had this key level going back to September of 2018. And look how many times price has rejected or bounced off this level right here at $102. A price rallied up here to $102.50. Sold back off. Tried one more time in 2019. The rejection. Tried one more time right here in January 2020. Price rallied. It's consolidated up here at 175. Now we'll look what happened after price sold off from highs of 175. It came right back here and bounced off this key level almost to within $1. It was 50 cents away. And sometimes people aren't aware of these key levels. They're so zoomed into the 4 hour, the 1 hour time frame. They don't zoom out to the monthly time frame and find these key levels that are pretty critical. Now I'll zoom in even further to like the 1 day time frame to see how strong this key level is. So I mean, you had this Amazon hit highs of 129 right here, sold off, came right back down this key level. You bounced off it once, May 12th. Another time it broke below it for a second, but instant rally back up to 130. You kind of bounced off it 5 days in a row down here. 15 point rally off this base down here. Now think about how many people thought about going short down here. They didn't know this key level was here. They're really zoomed in. They don't even think about this key level. They don't see it. They tried to go short down here on Amazon, and price instantly bounced on them, not knowing that there's a huge key level, historical key level going back to 2018 on Amazon, that institutions and smart money is taking trades off this low. Retail's trying to short down here. Now just think about a trade setup down here. If you know you're coming down this key level, you could buy some calls or shares right here. You have your other key levels drawn out, maybe one right here at 115, another key level here at 126. But your risk reward is almost $1.50. So you buy calls down here at 102. Your stop loss is maybe $100. You're risking $2.50 on your shares, but your potential rewards all the way up here to 115, 125. You're risking $2.50 on your shares, or maybe like $1 in your contract, to potentially make over $15 per share or $20 per share just by taking levels off these key levels. And that's what I'm saying. It gives you a really structured way to trade because these key levels are there. They're historical levels. If you take trades off these levels, it gives you a clear stop loss, and also gives you areas to look to take profits at, or you could expect sellers to step in or buyers to step in, vice versa. Now let's look at the Nasdaq 100. Now looking at the Nasdaq 100, if you've been following along, you may already see where I'm going with this. Look at where price bounced off over here. This level going back to July 2020. So this level right here, you had a rally all the way up here. 1-2 weeks of rejection, price consolidated, tried to pull back. It tested this level twice down here at 11,000. Price finally broke over it, rallied back down into it, held it as support. Now down here, November 2020, price held this July high as support, which is pretty bullish. And look where we are here, June 25th. Price came down here and bounced perfectly off this high from July 2020 and sent the market almost 1,100 points higher. I'll zoom into a smaller time frame like the 1 hour. The low on this candle was 11,068. So you're literally 10 points away from this key level, and this rally would lead to a bounce of about 10%. Now, if you didn't know this key level was here, you might have been trying to go short down here, even though the market was pretty overextended at this point. But look at how perfectly this key level is. And if you had this level on your chart, you may have been more cautious trying to short down here, knowing there's a huge key level that's been respected as support, tested as resistance multiple times going back 2 years ago. And you would have been able to formulate a pretty good long thesis right here, or a high probability risk reward setup down here. Now, let's look at a trade you could have taken using a key level on a stock like Amazon. Now, looking at Amazon right here, I'm just showing you some examples of what you could have done here. I went back and also drew these key levels going back to the pandemic highs at 109. You also have these swing lows right here at 112. You could also add another level right here. It's at about 122 price. Or like, yeah, 123. So you have these 4 main key levels here on the weekly time frame. Now let's zoom into like the 4-hour time frame. You're planning to take a long trade here. You already have these key levels marked in your chart, the historical levels on the daily and weekly time frame, daily, weekly, monthly. And you see price coming down here to 102. Now you're like, all right, what do I do? Brain blast. You want to go long down here at 102. So you see price coming down here, and instead of trying to go short right here, you're like, all right, I'm gonna set myself up for a high probability of 125 calls for August on Amazon. So I brought the strike down a little bit. I brought it down to the 115 strike, just make it a little bit easier. So you saw price coming down here, and the crosshairs are synced, so it should match up on both sides of the screen. So coming down here, you saw price coming down to 102. You know it's a key level. You have it marked in your chart. And so right here on June 16th, you said, all right, I'm gonna buy some calls right here. I'll stop out below this swing low right here at 101. You got some calls right here. You got the August 19th 115 calls. You got them at about 460 a contract, and your stop loss is about, say, 350. So you bought in at 450 a contract, stop loss is 360. So you're risking about 18% on the contract, and the highs, this gap right here, is about 100%. So this is about 5-to-1 risk reward setup. Now, for example, so you got contracts right here. Your price is clearly bouncing off these low right here. Depending on your position size, you could have scaled out some contracts right here, maybe like 2 or 3, just because you know you're coming to a key level. Clear some profits on the way up, just to make holding the trade a little bit easier. They take out 2 contracts right here about 567 a contract. So far you're up $1.25 on the contracts, depending on how many you take. If you take 5 contracts, you're up about $600 on this trade. You know, price continues to rally further and further. Now price is at 113. And these contracts are at 8.2 a contract. You're up almost 100% on these contracts. And now the next key level we have marked in our chart is at 123. And by the time you get there, your contract should be roughly probably like in the $12, $13, $14 range. So your entry was down here at 442. And you still have another 2 months in these contracts. The contracts go up to $12, $14, $15. And if Amazon starts really getting some volume and volatility into it, it could even test, Amazon price could test 130, and your contracts have doubled and tripled by the time before expiration is even nearby. Now, if you didn't have these key levels in your chart, you might have not been aware of this. You might have been trying to short the market down here at lows, not knowing about this huge historical monthly key level. But now you know how to take trades off key levels and how to set up high probability and great risk reward setups. Now, if this video helped you, or if you learned anything, just drop a like and comment. Stay tuned for the next video. Thanks for watching.